Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar or a combination with that and headline news or geopolitical. But it can also get really confusing out there if you're following along and you see good news and something bad's happening. Well, the market sentiment changed, and we try to give an explanation as to what's going on and why it's happening. So that way you can hopefully make an informed decision if you're out there kind of checking out where rates are at and hopefully make an informed decision for yourself as to what to do. A little bit about myself is I am a loan officer. I do work with the national lender, so we lend in all 50 states. I'd love to be able to earn your business if you can, if you're looking to refinance, or if you're looking to buy. So please reach out. We got some great products to help you out. But more than that, we like to be a resource for you folks. So if you guys got any questions about anything, please feel free to reach out. We're here to help you guys out. Uh, but more, so without further ado, we'll just jump right into it. We'll start off with the economic calendar. Uh, every Thursday, we get the initial jobless claims. So the initial one, last week's report, came in at 231,000. Forecast was supposed to kind of remain in that range at 230,000, and it came in a little hotter at 235,000. Now, this challenger layoffs is one we don't always talk about, but since it's here, we'll touch on. These are announced layoffs, so this is a pretty big jump from about just over 20,000 to 32,000. That's approximately 12,000 announced layoffs coming up in the month of June. So uh, it doesn't always mean that's going to happen that month. It could be spread over time here, that they're going to be cutting back over the course of time, or they might lay off 1,000 here, 1,000 there, type of thing, on down, depending on the size of the company and which company. So these are probably multiple companies on here. Now, continued claims also, we see a spike in that. So last week's number was at 1.328. It was revised slightly lower at 1.324. However, it came in at 1.375, much higher than forecasts. So this is something that definitely want to keep an eye on, especially this week, especially because tomorrow we'll begin the Bureau of Labor Statistics data for non-farm payrolls and unemployment rate. So we'll get a better look as to the health of our jobs, and that's something I think could be very interested in. Uh, Stocks are kind of up on some of this information. They're kind of feeling a little bit more optimistic. There's been a few Fed speakers speaking today, like Waller had said that he's for a 75 basis point hike at this one, but the September meeting he kind of feels that maybe it should be at 50 basis point is kind of what he's kind of thinking out loud. Again, next week we got the CPI report, and that came in pretty hot last time and really disrupted both markets, both stocks and bonds. We just started recovering back from that after that happened, and that was right around. If you look at the mortgage-backed securities, right around this period here, when that occurred, right around this period here, when that happened. So then we got right around this period is when it happened. So that's when you see this big sharp decline right there, and that was right around the time when the CPI came in, and the big concern was inflation. Now the concern it's been helping on bonds is concern is recession. So that's been the peak numbers. Now earnings reports will be coming out for Q2, coming out in the next couple of weeks. That could hold some bearing as investors get a better feel as to how corporations are surviving with these. If we were seeing in the first quarter that a lot of corporations were having bleak outlooks, as well as uh, the inflation cutting into a lot of their costs. That wasn't looking so well. And Q2, personally, I think that could be something similar to that, especially as we see a spike in layoffs and stuff rising. So I think that's something we'll have to wait and see. Tomorrow could have a pretty impactful day with both markets as a result of this. Today we're down 11 basis points, so that we were down further. We're down as much as I saw earlier, like around down 19 basis points. So at that time, a lot of lenders came in with worse pricing, uh, as a result of that. So for the most part, our pricing is going to be worse with where we left off yesterday compared to where we left off yesterday. So as you can see here, we had a pretty big drop off yesterday above the 50-day moving average, and here touching at the 25-day moving average. So far, that is acting as a floor of support, which is good news because prior to that, we were below the 25-day moving average. If we can remain above the 25-day average, that would be better for mortgage rates. Uh, but in the meantime, it's rates worsened a little bit today compared to where we were yesterday. Here's yields. We're getting a little bit of a spike here in yields today at 3%, we'll say just under 3.01 here, since it's 3.006. We'll round up. And last but not least, we'll touch on average rate for conforming loan limit. Now, again, these are based off of yesterday's pricing with the data. Usually it's a delayed by day because of data, average pricing. So the 15 years at 4.95. As you see, there was a bit of a spike, and the 30-year now is at 5.65. I believe we were like around 5.5 and 4.8 yesterday on those two rates. They did spike up quite a bit yesterday. Again, if you guys got any questions about anything as we wrap this up, please feel free to reach out. We're here to help you guys out. We'd love to, again, earn your business. So if you guys want rate quote or we could be of any assistance, please reach out. If you could do us a favor, we would greatly appreciate if you guys can like and share these videos. We would really appreciate that so we can hopefully grow our channel. And you guys have a great rest of your day. Thanks so much for watching. We look forward to seeing you guys in tomorrow's video. Bye-bye.